Bonjour, messieurs, dames. Good morning, and welcome to our seminar, which I apologize, we are doing in English, as agreed before with our speakers. You have all seen a topic which I think has even gained in actuality. When we talked about this seminar a couple of months ago, we knew we would have probably a new Commission of the European Union already in place. What we did not know, of course, was the outcome of the elections in the United States. But I think even before that, the topic was relatively clearly defined. We are living in a world of geopolitics, which has put the European Union in a position to which it has not been accustomed for a long time, or probably never, with the war in Ukraine, with the awareness of the security dimension of being dependent on a number of critical materials and technologies. We had COVID, and we are living also in a world where, especially after the election of President Trump, the confrontational relationship between the United States and China is not probably only going to continue, but even to be exacerbated. And that obviously has also implications for the European Union, how to deal in a new transatlantic relationship, how to face a China which has become increasingly assertive and which not only poses economic but also security risks. All this, of course, means that the European Union is in fact in competition with the United States and China. And what we want to discuss today is how the European Union, Europe, can position itself in this new complex situation and balance free trade, competitiveness, and economic security. Now, I would like to start this discussion maybe from a slightly different angle, because if we look at the situation, obviously the geopolitical and the geoeconomic situation in the last couple of years has fundamentally changed. But a number of factors which are related to the continuing deterioration of Europe's competitiveness, its productivity, its falling behind in the area of technological innovation, digitalization, is something which already started to happen quite earlier. And I would therefore like, before we go into some of the details of this very complex relationship, I would like to ask our panelists today to answer a slightly different question. But let me first introduce the panel today. I'm very happy that we have a very high-ranking expert panel, and I'm very honored to lead the discussion with them. We have Natacha Valla on my right, who is Dean of the School of Management and Innovation of Sciences Po. I think you're also a member of the Board of Directors of the Institut Montaigne. Thomas Wieser, who was for many years the chair of the Euro Working Group, especially during and immediately after the financial crisis years, and he's a non-resident fellow with Bruegel in Brussels. I'm very happy to have Elvire Fabry, a senior research fellow with the Jacques Delors Institut in Paris. And last but not least, Mallory Schaus, who is a research fellow with the Center of European Policy Studies in Brussels. So thank you all for coming. The question I would like to start this discussion is, why, if you look at the situation and if you look also at the Draghi report, and why has Europe fallen so far behind its competitors or its main competitor in that area, the United States, in terms of competitiveness, productivity, also in terms of GDP in per capita terms and overall. Are the reasons the sort of the more severe economic environment, or are there homegrown reasons which we need to address to see how the European Union can regain its position which it had a number of years ago? Natacha, could I start with you?
Of course, thank you very much, Dietmar, and thank you for the invitation to be on this panel, which indeed is very, very timely because we have had time to read and digest the Draghi report, which, and I speak now as the president of the National Productivity Board of France, where we are in the process of finalizing our 2024 report on productivity and competitiveness for France, but also in the European context. And I have to say this was, on a bu le rapport comme du petit lait, I would say, at the council. It's a question which is difficult to answer because it requires a one-size-fits-all answer for all countries of EMU and of the European Union. And in fact, when you look at the tendencies since the 90s, the trends have not been the same. They have not been comparable in terms of price competitiveness, but non-price competitiveness, in terms of who stands forward and who stands backwards at different times of this sort of construction of monetary union. If we had to make a snapshot diagnosis today, and I'm sure this will be shared by all panelists, we have the constat that there has been a lack of investment altogether in highly productive and high risk but high productive activities, in particular in R&D. At the aggregate level, we have lacked 1% of GDP relative to the US in terms of public plus private investment. I will come back to that because there's a complementarity that allows for different solutions. But that has been a structural factor that has weighed on our potential growth, but also on the productivity growth of our economies. The second factor, and this is something that has to do with more recent dynamics, has to do with what happened post-COVID. You know that COVID was really a rupture, something that broke trends in many dimensions in the European Union, in the EMU in particular. And one dimension being the fact that this major, I say COVID, but I should probably say the Ukraine war, because that's where we have had a sequence of supply side shocks. I know there's a discussion whether it's supply or demand, but I'm focusing on the supply side dimension of those shocks. One of them being related to the cost of energy, and this cost of energy hit members of EMU in different ways, depending on the history of the past 20 years. And here I would say the countries that were the drivers of European competitiveness in markets in terms of market shares, in terms of non-price competitiveness, were hit the most by that shock, which was a plain cost push shock, which ended up being not only, one-off or cyclical. Cyclical is not the right word, but also had a structural dimension. And we have to digest this structural dimension now, which is how do we deal with productivity and competitiveness in a world where there has been a shift in the relative cost of energy, and this shift is likely to last, we can discuss that, but to last longer than a few years, and therefore will require adjustments at the structural level in the productive capacities at the industrial level. So those are important elements. What does it take to make sure that we adapt our economies to this new nouvelle donne, this new deal in terms of energy supply and relative energy costs? How long will it take to adjust our productive capacities, and in which direction do we want to adjust those energy capacities? We can give details afterwards, but I think this is a differentiating factor between, if I were to caricature, between Germany and France, but countries that were more dependent on those primary energy sources that were the source of this huge supply shock, and those that were dependent on other energy sources that end up being more providing for more resilience to those shocks. Without giving away the results of our current reports, when we looked at competitiveness of this country in recent quarters, recent years, a couple of years, one striking factor is that this country is becoming again price competitive. So we have high cost of labor, we have probably high cost of capital as well, but for once, and for the first time since the decade 1990 to 2000s, we are, in relative terms, gaining market shares with respect to Germany in global markets because we are less pricey, because our cost structure is, in relative terms, relative to the recent past, more favorable than it used to be. I'm not saying the country is becoming more competitive at all, because it's only the price competitiveness that is at stake here. And it's probably not the competitiveness dimension you want to be focusing on, right? You would probably be more resilient and more forward-looking by focusing on other forms of competitiveness. But just to say, the relative strengths and weaknesses are changing, and there comes a major factor that I have not mentioned, and maybe that will be the last factor I will mention. I don't want to take too much time if I have 3 or 4 minutes. Which is the transition and the energy transition related to the environment. And here, and this is also something that was contained in the Draghi report, and I don't want to repeat it, but there's a volume of investment that is sizable, measured in terms of points of GDP, that have to be made to adjust our economies for the transition and for adaptation. And that comes on top of those reflections that have to reshape our energy sources. So there's a mix here, and that will be a policy mix, or a sort of optimization of the policy mindscape that we'll need to do, and take into account all those factors and the time dimension that comes with it. A last factor that I will mention for Europe as a whole, and that is not a scoop, it has to do with the way we finance our economy and we finance innovation on our continent. And here, a lot of work has been done on CMU. Thomas was there at the very beginning of when those ideas were launched a couple of decades ago, even now. And that's an area where the Draghi report underlines things nicely in a very pragmatic way. We have a regulatory environment and a cultural environment by savers that constrain our savings, which are excessive. So we have a lot of savings in the continent, but they don't go in the right places. We know they go to finance the US, treasury bonds or fixed income assets that are not really useful for us to grow and innovate. But we need to find now, in a very pragmatic way, without turning our back to financial stability. I'm not saying we should erase all the regulations that has been written since 2008. We've all suffered from, and we would suffer a lot from it not being there today. But I think there are adjustments that could be made for some of the actors and the big financial institutions, financial intermediaries that hold now a lot of our savings. I have in mind insurance companies and the non-bank financial sector, where adjustments could be made to regulation to allow for longer-term investments in riskier areas that would be the drivers of growth in Europe. With a caveat, however, because I think it needs to be underlined, what we observe right now, and you know that very, very well, but banks are not doing that bad. The financing through banks in Europe is standing on its feet. When it comes to the non-bank financing of the economy, what we see is that those private equity funds and private debt funds who have been eager so far to finance growth in a sort of universal way are now starting to focus on areas where we have to be very careful, because it's not necessarily likely to be the areas that will be conducive to productivity, innovation, and growth. And I have in mind a focus to retail investors. So we see private equity funds and private debt funds reaching out to people like you and me, proposing products to tell you a story that you will be financing things that you were not financing before, but with an allocation of risks that is not unlikely to lead to how should I put it, not financial stability risks, but to tensions that may need to be addressed ex post by adjustments in regulation. And those ex post adjustments may be suboptimal relative to the loosening of the existing regulation of the big actors that are solid today. So that would be my last message regarding the financing of innovation for productivity and competitiveness.
Thank you very much, Natacha. You have gone already quite a bit beyond the diagnosis to suggesting also measures which could stimulate innovation, competitiveness. You also focused quite a bit on the financial sector. This is also something, Thomas, I think you will address. Could you give us maybe your take?
Thanks very much. Natacha is still in a working position and not yet retired, and therefore she was quite evolutionary in her approach. And my feeling is that we are at much more challenging crossroads in Europe than would allow for slight changes to our business model, and then everything will be fine again. And that has, of course, a bearing on the situation of Europe between the rock and the hard place called China and the United States. And when I was back in university many years ago, we were learning things in economics about so-called Kondratiev waves, which said that every approximately 70 years, a huge technological and therefore economic and therefore social upheaval would come around and the world would not be the same again. And at the time, many years ago, I found this utterly stupid. I found that to be a forecasting determinism, which is very unscientific. But around 70 years after the post-war boom started, I believe we are in a huge upheaval where technological shifts are taking place, where the players who are in play are changing again. China, think of China 70 years ago, where the technology is changing significantly, and therefore who does what with whom is something totally different. And one of Europe's answers to the horrors and upheavals of the Second World War was the founding of what today is called the European Union. And we've been incredibly successful in producing a internal market for manufactured goods. We were quite successful against certain opposition in producing something like an internal market for agriculture. And we so far are a failure to have a seamless internal market for services. And as we are steadily moving more and more into a service-oriented economy, this fragmentation of Europe for services puts us at more of a competitive disadvantage than we would have had technology after 2000 simply continued on the trajectory that it was. One of the findings, of course, about this new economy is that you don't have manufacturing plants for a certain good spread around the globe or around the continent. The winner, the first inventor, has a tendency to reap all of the benefits and scales up and up and up, and therefore scale matters enormously. And if we have fragmentation across national borderlines within the European Union, it is very difficult, nearly impossible, for a European technological firm to scale up to such an extent that this firm becomes a global winner, and therefore a force that lifts up not only the country it is in, but which lifts up all of Europe. And one of the reasons why we have such problems is not only the fragmentation for the product itself, but as Natacha already mentioned, how we finance innovation, how we produce innovation, and how we finance then the resulting firms and the scaling up of the firm. And innovation, of course, is not something that you can decree. We have at least 3 very successful clusters around world-class universities in Europe. Cambridge, not in the European Union, Zurich, not in the European Union, and Munich, which is in the European Union, where around these universities, a huge amount of high-tech startups have emerged. But as soon as they reach a certain size, they tend to put on their boots, pack their suitcase, and off they go to the United States. And why is that? We're very good at small-scale financing. There was a time when we had more venture capital funds than the United States, but the average size of the European venture capital fund was around 1/10 to 1/20 of American venture capital funds. And that has something to do with cross-border fragmentation again, but it also has something to do with the kind of funds that we have in Europe. When you have a pension system which is funded pay as you go, as you have, for example, in Germany, very weak second pillar of pensions, very weak pillar of third pensions, the long-term financing of innovation and the long-term financing through the capital market is significantly impeded. We've got dynamic economies in Europe, Netherlands, Denmark, Sweden, and they all have huge volumes of pension funds means. In the Netherlands, for example, around 200% of GDP equivalent of funds. And they fund innovation, they fund scale up of innovative firms, and they provide for an environment where such firms can grow. So our bank-based system is something which was super for the manufacturing economy we all grew up in, some longer than others here, but in a service and technology and innovation centered economy of the present and of the future, this will not suffice any longer. So what we would need to do, if you excuse me, Dietmar, for going to some kind of prescription, what we need to do is to move into the 21st century at the level of the European Union, get rid of fragmentation of our economies for the provision of services. We have to find means to finance innovative firms in a way that they can grow in Europe and not leave for the United States and grow and become world-class leaders there. We need to make sure that there is a complementarity of public and private investment through the right kind of incentives. Much has been said, for example, as a footnote, about the investment weaknesses in Germany. And as, for example, Guntram Wolf, whom you mentioned, has written extensively about this issue. The real weakness was private sector investment, where German firms tended to keep back funds in their balance sheets instead of investing. So investment climate, moving away from the bank-based system, getting rid of fragmentation in Europe, and that will, to come to the theme of today, that will make us move into a stronger position so that we're no longer between a rock and a hard place, but we have at least the possibility of having a global system where the power not resides only outside, economic power resides not only outside of Europe. And since there is a high correlation between economic power and political power, where we become more of a geopolitical player than we are today, despite all efforts and pretensions that we have along these lines.
Thank you very much, Thomas. Thomas, you focused already on some of the key issues which were also obviously addressed in the Draghi report, and to which I think we will come back in a bit more detail during this discussion, including the fragmentation, which is of course linked to the issue, is the internal market, which we still sort of put forward as something which the European Union has achieved and which is something which will bring us into the future, where in reality, you talked about the fragmentation. The internal market was created in an economy which was quite a different one to the current one. You also addressed finance and the balance of public and private investment. But before we come back maybe to some of the questions which I would term more the sort of the offensive strategy to regain competitiveness and productivity, I would maybe also like to address the fact that we are, as I said in my opening remarks, in an environment which of course is not the benign one or relatively benign one to which we were used a couple of years ago, not only before the war in Ukraine, but also before this increasingly confrontational competition between the United States and China. And now we are faced with an elected president, re-elected president in the United States, who has already threatened quite a number of countries. Actually, there are very few he has not threatened with sanctions and duties. He will take office in January, and I think the issue is urgent and has been already discussed. What can we expect from the Trump administration in the area of trade? What could the likely Chinese reaction be, which would also affect Europe? Elvire, could I ask you to maybe discuss this?
Yes, good morning. Well, what can we say about the Trumponomics, as we call them now? What do we know? What do we miss? What can be the estimate at the moment? While we know that Trump has already made a lot of promises during his campaign and has already announced the first measures that he would take as early as in January 25. First, what we know is that there's a sort of coherence in his strategy to boost the US growth, because he's really focusing on scaling up the technological innovation of the US in the digital sector. So first, betting on deregulation of the tech sector, a U-turn from what Biden started to do with some antitrust policies. Deregulation of the energy sector to provide more energy power to the data center to support that innovation capacity, and boosting all AI supercomputing capacity of the US. Deregulation of the banking system and tax cuts to increase the capacity of investment in the US markets. All that put together means that there's going to be, we can expect a push provided to the US economy. What we know as well is that Tariff Man is going to use heavily this tool, his favorite tool. But what we don't know exactly yet, it's the amount, because he has announced the well-known amounts about universal tariffs between 10 and 20% on all imports in the US, and in addition 60% on China imports. We have seen that he has announced the tariffs concerning Mexico and Canada, and now targeting Brazil. But we don't know yet if he's going to implement really those tariffs. How is he? At least currently the way he's threatening to impose them is a huge leverage. We don't know exactly the targets, we don't know the sequencing, and we don't know exactly the objectives. In the sequencing is interesting, because the way he has started to target Mexico and Canada means that he's been closing
the back door of the US market to increase the leverage of future tariffs that he would impose on China, but as well on the EU or other partners. The tariffs that he aims to impose on BRICS members if they depart from the use of the dollar as much as 100% is as well limiting or reducing the perspective to increase diversification to increase diversification policies for China, to increase its economic links with the BRICS partner and notably with Brazil, because those past years China has been investing so much in Brazil and increasing the economic partnership. And so what we need to pay attention is the objectives of those tariffs. There's still a lot of uncertainty if it's about rebalancing the trade deficit, which was already his obsession during his first mandate. Will he limit himself to some negotiating some deals to increase some US exports to specific countries? We can bet on that. There will be a strong pressure to align on the US policy towards China, decoupling from China in specific sectors, the tech sectors. But there may be an additional aim, which is a deeper, which is a more structural objective, which is about really reshuffling globalization and pressuring what we can call the surplus country to transform the economic model. Why I'm saying that is that when we listen to what the current discussion between the new members, I mean the members of his cabinet, the main actors in his cabinet, we see that there will still be some debates between the Wall Street men's. I'm thinking about Scott Bessent in the Treasury and Lupning in Commerce, who are aiming at pressuring a lot China to rebalance its model, to increase the demand, and to as a way to reduce the surplus affecting the US trade deficit. And on the other side, we have the new USTR, which was the deputy of Lighthizer, who's focusing more on trade deficit in itself, who would be more satisfied maybe with some trade deals. So what we can expect is to have some not only tension within the cabinets, maybe some contradictions also in the way some will aim at preserving a strong dollar, rather on the side of the Wall Street men's, and on the side of the USTR, a willingness to devaluate the dollar to increase the US capacity to exports. Those are the gray zones that we will need to pay attention in the coming months. What we can expect is a very complex bundling of objectives between the pure trade objectives and hard security objectives, or as we have seen with Mexico and Canada, invoking the migration issue and the drug flows. So for the Europe, it's going to be very complex. When we listen to Bessent's, to J.D. Vance in September, already saying that if the EU wants to preserve some support of the US to help Ukraine, we should drop our digital regulation and not which could be affecting Elon Musk platform. We see that there's going to be really a mix of arguments, and that the bargain will be very toxic, affecting some European interests. What does it mean for the Europeans? If I can already comment some, provide some elements of analysis. For the Europeans, we see that there can be some margin of negotiation, trying to promise that the EU would be buying more LNG, as Ursula von der Leyen has already proposed, and the president of the European Central Bank, Lagarde. We think obviously that increasing expenses in the defense field and buying more US armaments will be a key issue. But all those elements of negotiation will need to be backed up with a strong position on the way the EU can also answer by implementing tariffs on US exports, something that the DG Trade is already preparing, as it has done in 2018. This will require not only a very targeted strategy trying to limit the impact on the EU side, but also an important political cohesion between the member states in the way we will be implementing those tariffs, but also to use the new trade defense tools that we have, because in the toolbox now we have new instruments like the reciprocity in public procurement, like the anti-coercion instrument. If we were to use those instruments against some aggressive initiatives from Trump, this would require a really strong unity, and this is what at the moment is really lacking between the member states. So if there was something to be urgently worked on, it's the coordination of the member states, and which echoes what you were saying before about the single market. It's really about increasing the leverage of the single market, and this would need also to be accompanied with very urgent measures in pulling together European capacities and integrating the single market. But it's not only about dealing bilaterally with Trump, as we need to anticipate what others will be doing, because the initiatives taken by Mexico, by Canada, by Japan, and obviously by China, will be shaking global trade and reshuffling completely value chains, and we also need to engage very quickly with the Chinese counterparts to have a hotline for dialogue, because we can anticipate that there will be some trade diversion effects, and the need for China to access more the European markets, and the need for the Europeans also to adopt some defensive measures, as they have done for EVs, not to close the European markets, but to anticipate and to prevent some imbalances in the single market. And it means that we will need to keep a sort of balance between that defensive approach and also a cooperative approach with China, because we're also very dependent on China to access some critical strategic materials, the so-called strategic critical minerals, and also currently increasingly green technologies. And there's a missing word, if I can comment in this title, which is decarbonization, because this is a key objective for the EU, not only because we aim at fighting against climate change, but because we need to increase our energy dependency, to diminish our energy dependency and to increase more autonomy. But this is also impacting a lot our competitiveness and economic security. So this is adding an additional element of complexity in how we will need to deal with the US and China.
Thank you very much. And thank you also for sort of laying out that when we look at what is likely to happen under the next Trump administration is going way beyond trade. You mentioned, you coined the word Trumponomics, and you talked about the deregulation of various sectors. I think it is very important to look also at this angle. You mentioned China, and of course there will be different views on how to deal with China, sort of as a response or part response to an overall policy package when dealing also with the United States. It's part of the equation. Mallory, you have been working on China. One thing I think which was notable is if you look at worldwide reactions to some of the announcements made by President-elect Trump on what many thought will be sort of a very aggressive economic and trade policy, China was not completely silent, but was relatively restrained in any reaction, sort of waiting what will happen. Mallory, how do you see sort of the expectation in Beijing, and how would you react also to Elvire's comment that when we deal with China, we need to have sort of a balance between a cooperative approach and defensive measures using our toolbox, but always aware of the fact that we need China in terms of our dependency on critical inputs also for decarbonization, which you mentioned at the very end. Mallory, please.
So thank you. So I would say with respect to China, it is based on the open strategic autonomy that is the new foundation of the EU trade policy since 2021 and also other policies. And it follows the economic security strategy that has been released last year and more concretely implemented since January of the start of this year. With China, what does it mean, open strategic autonomy? It means clearly openness to the greatest extent possible, but also being more assertive and paying attention to the resilience of our economy. And what we see with China more recently, if we look at the defensive side, so the use of the EU trade toolbox, and notably the traditional trade defense measures, there is a harsh increase in their use and even some form of escalation and tit for tat between the EU and China. I have counted over the past, so since August of last year, 28 proceedings, investigations have been started in terms of anti-subsidy or anti-dumping procedures. Out of those 28, I think around 22, 23 are against China. This does not mean that there are that we impose directly measures, so anti-dumping or anti-subsidy measures, but still it means that there is an escalation, and just over the past month, so of October, there were 4 proceedings that have been initiated by the European Commission. What does it mean? It means that at least at the EU level, there is a more straightforward and assertive stance with respect to China. Why? Because over the past decade and even 15 years, China is progressively closing itself, in particular with respect to the Western world, including the EU. And you can see that this also affects the competitiveness of the EU. If you look at, for instance, restrictions over the past 5 years, they have more than doubled. We are encountering around 2,000 barriers just linked to the Chinese market, which were in 2017 or 2018 around 900. So more than double restrictions. It's also linked to the fact that we understand, I think there is a better understanding of what is China and what the objectives of China are. China is basing its economy on an industrial policy, a lot of interventionist policies, with a predominance of non-market policies and practices, not just subsidies, but is a whole ecosystem that is working there. And this, of course, creates a complete unlevel playing field. So we cannot continue like this. Then there is, I think, also an understanding of a better understanding of the governance of China and what China is actually doing, not just with trade, but in the academia, in think tanks, which is contradicting, trying to denature our fundamental principles of our democracies. And I think this is taken more seriously into account. So there are, of course, the economic side. There is, of course, the economic side. There is also the ideological side. And I think it's at least at the EU level taken more seriously. But as Elvire mentioned, on the member state level, it's quite difficult because you have to try to find a balance between the economic sides and our values embedded in the democracy. So what I think, still the last point on the trade defense instruments that we are using is that, of course, it's a tit for tat. It's, of course, some form of escalation. But what is quite interesting to note is that in parallel, there is a systematic submission of cases related to those anti-dumping or anti-subsidy investigation, just at the start of the investigation, but also the measures that are referred to the dispute settlement system of the WTO. And this works. So actually this tit for tat between the EU and China is actually enhancing the role of the dispute settlement system of the WTO, which is very positive because the longer term will remain the rules-based multilateral trading system reformed. Long term means 2035, 2040, but there we see it's international politics. So it's really step by step trying to build the future of the reformed system. Now, first looking at the short medium term with China, I don't think, so we have this battle, there are dialogues, just look at the not the joint statement, just the outcomes of the last ministerial between the EU and China of December of last year. You see that there is continuing dialogue. And even if it's more contentious at the WTO, it means also that there is a dialogue. Before having a panel or an appellate body, you have consultations. So all this dialogue is extremely important. So it means that you have a tit for tat, you have a dialogue, but I don't think that we'll come like this in the short to medium term towards a revised comprehensive agreement on investment, for instance, a revised CAI. This, I don't think it's the time. Perhaps we could arrive at some point to a sectoral agreement in some specific areas, notably linked to the green transition. But in any event, any success with China will be of our strategy, the EU strategy, will really be gradual, in time, progressively, and also with respect to the topics. So it's not going to be an all-encompassing opening measure, no. There is now, we are conscious of what we are conscious and taking more seriously what China is, And so we are going to balance, and the dialogue remains. Cooperation, what does it mean? It's political cooperation, but there is also cooperation in the sense between companies, and companies will remain so reshuffling still, but remain also in China and adopting appropriate strategies according to how the economy is evolving. Now, a last point on the WTO, reformed WTO, making a bit the bridge with Trump, is I think that at some point, when, I don't know, but there will be an understanding by the US, which is far more distant towards the WTO. There will be an understanding of the real need of the EU inside the WTO for the longer term. Because the debates at the WTO, it's already starting at the reform, but very slowly, will be, of course, on economic aspects, legal aspects, but extremely harsh on the political side, ideological side, if you wish, philosophical side. And there, the US will understand that it needs the EU. And the EU is a proponent of this rules-based multilateral trading system. So there, I think, at some point, après les turbulences, there will be an understanding of this link, of this need of having a close link economically, but also importantly ideologically. And this will lead the US to understand that it needs more stability also with respect to the EU. I hope that already now the US is going to understand the bad economic effects of tariffs on its own economy. Just simply, its economics are clear. Tariffs are, of course, bad for the foreign countries, but also for its own economy in terms of inflationary effects. So all in all, we are living in a world of a lot of unknowns, but I think that we have to manage the fragmenting trade relations right now, but we know also what this long-term horizon is. It's a reformed rules-based multilateral trading system. It is more services trade compared to manufacturing trade, and it's enhanced sustainability. And all these 3 points, the EU has a lot of strengths, and even more than the other players. So it has an important role to play now, in the medium term and in the longer term. And so the EU, I think, even if its weight at the global stage, economic weight at the global stage is declining, and now we can read it black and white, the EU as a whole, taking all the dimensions of such a supranational entity, will remain strong in the future, despite the turbulences that we are living currently.
Thank you very much, Mallory, and thank you also for sort of explaining a bit the relationship with China, the European relationship, and sort of, I think the cases and the number you mentioned, and the fact that we have so many proceedings in WTO indeed does probably suggest that we have a framework of dealing with China, which for the time being at least allows for gradual development in a certain way. I'm not sure that everybody would so much agree on sort of your more optimistic outlook on unity in the European Union, and also the prospect for longer-term convergence of views between Europe and the US on China. But I think that is an interesting argument you brought forward. For the next round, I think we need to be a bit shorter, and I would like, therefore, to ask you to limit your answers to a bit less time. There are a number of questions I think we still need to address. Elvire mentioned, I mentioned this already, that Trumponomics is about deregulation, among other things, about the tech sector, energy, banking, etc. Now, we had a seminar half a year ago in which Natacha and Thomas participated in Vienna, which was sort of a bit of a prelude to today's discussion, where we focused on the question, have we seen the end of neoliberalism, and what does it mean for the multilateral system? Now, we were at the time talking about Bidenomics to a certain extent, and even though it had many protectionist features, and Europe didn't really feel that much comfortable with some of the measures, in a way, we have followed on that path in terms of industrial and technological policy. Now, Trumponomics is a mixture which goes in a different direction, but this sort of clearly declared intention to deregulate a number of sectors. What does that mean for Europe? Is that something not necessarily a way to follow, but do we need to rethink our approach? What does it mean? How does it fit in also with one of Draghi's recommendations in his reports about the bureaucracy and the excessive amount of regulation? Natacha.
Thank you. I think, and that was very interesting to hear the developments on China, the US, and think more in this perspective. Your question about this Trumponomics and this deregulation discourse is really heterogeneous. I think the common point is to say, I will deregulate, that will free up growth, and that will without putting constraints related to multilateralism and the international order, that will put us one step forward. I'd say three things on this. On regulation, I would like to focus on finance, because that's where I don't want to say this is ambiguous, but I would really like to say and stress what I started to say earlier, which is we should really be thinking with an ecosystemic view on finance and regulation in finance. And I think as much as we have collectively, and the US as much as Europe to that extent, since 2008 established a very safe, I think we can say, environment for banks and the banking system, we have lagged behind on many other areas, and we have had some distortive implementations of the frameworks between the US and the non-US. Take, for example, an insurance company active in Europe. It has to deal with Solvency II. An insurance company active in the US has to do with US GAAP accounting. That makes a heck of a huge difference in terms of what kind of solvency ratio you're able to have, what kind of profile of investments you're able to have, not to mention your core business, which is the allocation of your liability portfolio. So I think here we have a double regime for those entities that are very much regulated, under which the current system, US entities have it easier than European entities. I think we should see that, despite the fact that on paper things are not that clear. But at the same time, we have entities that are under-regulated everywhere, including here. And the mistake would be to say, we stick with a very strong banking/insurance companies regulation in Europe. We close our eyes on what's happening on those, we used to call them shadow banking sector. It's not shadow banking really in the sense of nasty finance, but those are channels that are trying to allocate savings to other areas in a way that is completely unregulated, and that might lead to something similar, if not systemic-wise, something similar to what we've seen in the various financial crises that we've gone through in the past 20 years. So I would say, be careful with finance, but this is valid for the US and for Europe. the consequences, unfortunately, of deregulation in the US are likely to be, if they are made in the wrong way from a financial stability perspective, we are all going to pay for it, very likely so. I mean, I don't think we should have the illusion that the systemic links that have been well controlled for the banking system and to some extent for other, big regulated institutions are not there anymore for other institutions. That's the reverse. So we should be really careful about this. A second point has to do, and I think you mentioned it, Elvire, the international role of the dollar. And the fact that you hear Trump today say, what did he say? If you don't use the dollar anymore, I don't know what kind of threat
If you don't use the dollar anymore, we will tax you 100%.
Exactly. So tariffs against use of the dollar. This is an outrageous use of international, usage of a currency. And my sense is that in Europe, we're sleeping. We have a euro which is between 20 and 25% market share for all users of an international currency. We're happy with that, and we don't do much about that, despite the fact that the Commission has changed its discourse a few years ago already. But at the same time, you have a whole world, the non-EU, say non-advanced currencies, non-US world of so-called emerging economies. And I don't like that word because that's too mixed of a pack to be named under one name. But they're really feeling strongly about it. And slowly, but surely, they're establishing mechanisms whereby they will reduce the dependency on the dollar. Whether they will trigger, the sort of distanciating from the dollar tomorrow, I don't think so. But take just China, and we are discussing the swap agreements between China and the neighbors. It's all there. I mean, the sort of resilient monetary agreements are being and have been developed already outside of the US dollar influence sphere. Well, at some point, you will come to a point where this part of the world will really have the choice to opt out of the dollar or not. I don't want to force that too much because I'm in the French debate. I'm known to be probably too much on this side of the debate in thinking that the de-dollarization of the world is something we might see still from in our lifetime. But I think we should take this very, very seriously. And then the third thing is that perhaps more on China than on the US really, and this is more recent evidence with our students at Sciences Po and with the links we have with Chinese universities. I really have a mixed feeling because they have, for the past couple of years, they're really reaching out to us, inviting us to events, showing us how, I mean, in a way which we were not anticipating to be associated with the real developments in China, how things are evolving there. When you visit them, you see that the slowdown we speak about in China, it's a relative slowdown. So when you look at the economic developments here versus economic developments in China, okay, urban China in big first tier cities, things are not going that bad. So we are moving from 5-6 to 3-4 growth rates of GDP, and 3-4 is better than our 1%. And year after year, that makes a difference, and you do feel the difference. So it's they're facing challenges, but they also have strengths, and those strengths are related to long-term strategies and the long-termism which you were able to document, but I think which we badly need for our competitiveness policy and investment policy. Yeah.
Thank you very much, Thomas. Same question to you, but you might wish also to have a very short word on the role of the euro, since Natacha referred to de-dollarization, and the role of the euro has been something in the euro debate for quite a long time. Please.
Maybe demonetization. The first couple of words, very shortly, just on regulation, which many people in Europe say we're incredibly proud because the others innovate and etc. and Europe regulates, and maybe indeed we do overregulate. And we have, of course, a very specific system in Europe where much comes out of Brussels, which then is carried to national capitals, to national parliaments, implemented as national legislation in slightly different manners, and therefore counteracts what we would regard as being a seamless internal market, even for manufacturing. So what we would need is a more uniform production of legislation in Brussels, regulations instead of directives. That brings uniformity at least. Secondly, we have a tendency in Europe, especially on the continent, to see life as incredibly dangerous. And if you venture out of the house, you'd better have a safety belt on and suspenders and a crash helmet. So that means that we try to regulate against any future risk that may emerge behind the horizon or over the horizon, whereas on other continents or in the Anglo-Saxon sphere, you try and regulate negative consequences, which has significant drawbacks, that is totally clear. But maybe we try to take account of too many future risks, which still are just imagined and not realistic. And thirdly, we do have a legalistic mindset, which makes our regulation bureaucratic, cumbersome, slow, and counterproductive for the, let's say, transformation of new ideas into economic reality. So what we would need is a certain, let's say, change of mindset, at least in Brussels and at the national level. On the role of the euro, if we just continue as we are with slightly changing relative weights between the US and China and Europe, I think at least I and maybe many of you still will not be around to have seen a significant change in the role of the dollar, especially given that the alternative currencies are either mini or are protected by capital controls, and nobody's going to invest a centime, a sou, a dollar, or a yuan, maybe yuan, yeah, in a country which has significant capital controls. And I don't think that we will see a world where capital controls would get significantly less over the next decade or so. Let me just finally say, if I look into my wallet, what do I pay with? Well, either European banknotes or American credit cards. There is no significant European credit card. If I go to Japan or wherever, I pay with American credit cards. So all of us are supporting the American-based and dollar-based payment system. There is no intelligent cross-border European payment system. Nobody complains about it. Everybody, you go abroad, you go to Orly, you pay with the Amex. Fly to Vienna, pay with Visa card. So there is very little discussion of that, but what we're constantly doing every day of our life is supporting the profitability of the American financial system. We're propping up the dollar, and nobody's conscious of that. So ask John Lemire to produce a European credit card.
Thank you, Thomas. Before I turn to the audience, maybe one last question to my left, which I would like you to answer very shortly. Elvire, you mentioned that as a European part of the European response to a more aggressive policy of the new administration towards Europe might be increased purchases of LNG, as Ursula von der Leyen has suggested. You mentioned also defense equipment. Now, that certainly, I think, would be something which President Trump would appreciate. Of course, it goes directly in the other direction of European efforts to sort of create a more streamlined defense sector, not only to spend more on defense, but also on European procurement. So it would go basically to the contrary of what, especially in this country, has been seen very often as an essential part of what is called strategic autonomy and or European sovereignty. Now, my question is in the new, it's a provocative question, in the new geopolitical, geoeconomic context, does the concept of strategic autonomy for Europe still make sense? Or aren't we going in a direction where we say, well, Mallory mentioned ideology with relationship to the United States and China, but could one argue maybe it's more important to be aligned to the United States, and this would correspond more to the European interest than trying to balance in the middle and getting squashed?
As you ask me the question, I would tend to consider that more than ever we need to focus on strategic autonomy, because I mean, this is very challenging because you just mentioned it. Can we afford at the same time to buy more US equipment and invest in defense industry at the EU level? That's the whole challenge, and Germany will have a key role because viewed from Washington, Germany is really viewed as the small China. And the expenses, I mean, all the investment that Germany will decide to focus on defense budget will be decisive. Now, I would tend to consider that more than ever, strategic autonomy is needed, more complex, maybe more. Needed at a more granular level. In which sector can we increase our strategic indispensability? It's not about catching up in some sectors where we can't catch up, like the digital sector with the GAFAM, or the China has really now a huge leadership in the green technologies. But as Draghi mentioned himself, we need to differentiate where we cannot catch up, like for the solar panels, but where we still have some capabilities and need to scale up. And so it's not about being vocal on strategic autonomy. It's about thinking more at a more granular level where we have dependencies, weaknesses, and vulnerabilities, and where we can increase our own European leadership. And this takes us back to innovation capacity, finding some alternatives to some technologies where we have a huge dependency, as we see with the batteries for the electric vehicles. We haven't talked that much yet, and that's my fault because I should have mentioned it before. But we also need to think about diversification, because we think about the EU squeeze between the US and China, and there's no way those two markets can be compensated directly by an increased access to other markets. But if we think about the debate that we currently have with Mercosur, this is precisely the debate on Mercosur has to be viewed through the lens of that increasing geopolitical tensions, and we need to increase our market opportunities in those markets, which are not only economic issues, but also from a geopolitical point of view, increasing links with partners throughout the world. With Latin America, with Japan, with Australia, and And if you allow me a last remark, going back to this potential deregulation trend, I think we have to differentiate which is the Trump impact on global rules, multilateral rules, because he has decided to break any multilateral rule, so he won't comply with he won't bother to comply with any multilateral rule. But this is different from administrative burden. And when we analyze what we should improve within the EU, we need to reduce administrative burden. We need to rethink some regulations, but we definitely need to try to preserve the rules on which currently 75% of global trade is relying on. And the risk that we're facing is to have an erosion in compliance with those rules, and really a big mess in international supply chains. So it's not only about legal conservatism, sort of European legal conservatism, but it really would have a strong impact on not only on the global economy, but on the EU economy. And on the other side, we need to rethink some rules in the EU. We haven't talked about competition policies. We need to find the balance between preserving some level playing field within the single market, but increasing our level playing field with the partners abroad, and notably, of course, the US and China.
Thank you. Thank you. Mallory, 1 minute from your side. The strategic autonomy or alignment with the US?
It's open strategic autonomy. And I will just explain quickly why exactly the magic trick is the diversification strategy of the EU. That's really the magic trick, is that if it doesn't go well with one or the other, there are the developing countries, and they are actually asking for us to integrate more. So we have to make the link between open strategic autonomy on the EU side and on the global side, what is called by the WTO reglobalization. It means, and this is supported by the diversification policy strategy of the EU, it means newly integrated economies globally, better integrated economies globally. It means enhanced sustainability. It means also services trade. And so it means really that the EU, there are opportunities for the EU politically, for the companies economically. And so we have to build a bridge progressively between this open strategic autonomy and reglobalization, which will be in the longer term, but everything is incremental. And the magic trick is the diversification strategy putting in place by the EU. And we need the developing countries, and the developing countries are also voicing the need for them to also scale up thanks to notably industrial policy.
Thank you very much. Questions from the audience? Who would like, please?
Thank you for the speaker.
You get a microphone, yeah?
Thank you to all the speakers who reached us with well-argued subject, which has been a debate for years now in Europe. And I remember the Prime Minister, a Vice Prime Minister of China in Detroit in the United States when I visited the cars company, and said the problem is not with China, the problem with the United States is not updated to the technology to compete with China. So the problem is not in China itself more than in Europe, and more than in Europe and the United States. And the answer, we heard it today. We heard all the answers today. The problem why what the speaker said now have not been put into action. Why the debate has been for 10 years, but nothing happened. Why? I mean, is it because of the banking system dependent on the United States? Or is it because of national differences? Germany has its own policy, Denmark has its own policy, Britain has its own policy, and the end got out. So really, the problem is inside. I mean, we have seen the other thing which has not been covered maybe here, why traditional, I would say, allies, economic allies of Europe have been lost. I mean, Brazil, Saudi Arabia, for example. Saudi Arabia now, it has over maybe almost 200 billion with China economic relations. Half of the Arab economic relations is with Saudi Arabia, Arab-China economic relations is with Saudi Arabia. So the answers, I think the answers are not in Saudi Arabia, nor in Brazil, nor in China. The answers, the speakers well argued today here, and the answers is in Europe. Thank you.
Thank you very much. Another question, please identify yourselves by name and affiliation, because it would be for the benefit of the audience. Please.
Michel Makinski, chercheur associé à l'IPSE et l'IOGA. Two short questions. First to Natacha Valla and Thomas Wieser. With regard to the financing priority, what's your assessment of and the reluctance and even opposition from certain actors towards financing through debts and opposing some Draghi suggestions? To Elvire Fabry, congrats for your presentation. On Trump's economic policy, don't you think that there is a strong contradiction between raising tariffs on one hand and struggling against inflation? And as inflation was a key issue for electors, if inflation is rising, Trump is facing a very, very big issue. And one word on the currency struggle versus dollar. I think we should not take it too much seriously. I mean, we have seen that at the last BRICS meeting, participants did oppose to launching their own currency, and rather they decided to trade with the national currency. And even China is going step by step with the international yuan and the digital yuan. China takes care of its interests, including using dollar.
Any more questions? If that's not the case, then I think we have a final short round with answers to those two questions, or several questions, in fact, from the panel. And maybe I could start with Mallory and then and go the other way for a final comment.
There was no question addressed to me. I think a final comment is on the role of companies. I think the important role of companies in these times. First, based on their agility and the fact that they are turned towards economic opportunities, companies may contribute to what I call positive reshuffling and trying to find the opportunities all around the world. But they have also a very important responsibility, because when trade policy is shaped in protectionist times, is heavily linked to the lobbying by companies. And their companies have to lobby responsibly, and take the examples of the merchants for peace that appeared after the First World War, who actually acted towards a de-escalation of the tensions. So my last verse is really towards the companies. They can help us going beyond the critical times in which we are.
Elvire, and maybe in your final comments, the three of you could also very shortly address the pertinent question or comment by the first questioner, who said, where do we go from analysis to action, and what is actually happening on the European side?
Well, first of all, concerning the inflation question, numerous economists during the US presidential campaign took the floor to say tariffs would have an immediate impact on increasing inflation on the US side. If you listen to Trump's team, they considered that it would be compensated with tax cuts. But when we see the piling up of tariffs, and if we're talking about universal tariffs, of course, it would have an immediate impact on consumption goods. So let's see if it's a more targeted tariff policy, which would be, let's say, more cautious. If it's really universal, across the board or universal, the impact would be huge. That's for sure. But in 2018, when the first tariffs were implemented on steel and aluminium, it didn't have a strong impact yet. Now we're entering into really a new age of tariffs. Concerning just the de-dollarization, I completely agree that we're very far from a de-dollarization, but we need to pay attention to all the additional new initiatives that are taken, not only on the Chinese side, but also on partners of China, and even the EU would be interested in a certain way to rebalance that dependency on the dollar. And I was in Beijing on the day of the result of the US election, and I had the feeling that the Chinese were not as nervous as we were, Europeans there. They have been working and preparing a Trump 2 for the past 4 years, working on diversification, working on de-dollarization, and they know that the impact will be huge on them, but they are preparing. And the BRICS currency is, for the moment, is a dream. It's not serious, but the trend of de-dollarization, just a signal that it gives, we need to pay attention to that. And just to address your initial question, I think that what was missing until now was really a sense of urgency. And that's what is the most interesting in Draghi's report, is really, and we have to take it seriously. It's now or never. And I think that his alarming analysis is he's really making a state of play of current problems, of challenges. Everything is in the report. The menu is there. What is missing is the political will at the level of the member states. We have a problem at the level of the member states. We may have some at the level of the European Commission, but the European Commission has been pushing rather during this past mandate. We have a deep problem at the level of the member states. And so it has to come from a bottom-up approach. And if we've been losing part of Brazil, let's say, Saudi Arabia, because China was investing all those past years, and China has invested a lot in Brazil, is importing a lot of agriculture goods, and that's why economic links are really also leading to have political implications. Sorry, I think that if we take seriously that sense of urgency, we should also switch a little the way we conduct our policies, less about preserving yesterday, but rather about preparing the future. It seems very basic, but we're still in a position to try to preserve yesterday's world. And we have to anticipate much more how to wait in the future.
Thank you. Natacha, brief final words from you.
Yeah, I think I agree with what has been said. And the fact that we have a wealth in Europe, which is sizable in terms of tangibles, in terms of intangibles, in terms of education. We're not starting from nothing. But the examples you took, you spoke about Saudi Arabia. Our president was visiting Saudi Arabia until today, actually, or yesterday. And when you look at what was at stake in the discussions, French firms have been very present in the kingdom, but will say for infrastructure projects, hospitality, arts, those things where we have a strength. And those strengths, I think we have neglected them a bit. The quality of our schools, we have neglected that. We still have very good schools that produce very, very good brains. But, you know, as a system from age 0 to age 25, we need to focus on making this really an asset, as you said, not only for the past and for vestige du passé, but for the future. And this is very much un atout pour le futur. And the ability to accumulate capital and accumulate capital in a technological, meaningful way. And I think we have believed so far that there was an incompatibility between this and preserving our values and a sort of model of society that would be affordable. And I think we need to reconcile ourselves culturally with the idea that we can be looking forward to the future, being aware of our relative strengths, being willing to work more when it's needed. And I think we probably need to work more in some ways, you know, more intelligently, more hours, but we need to be mobilized for this, and it will not happen on its own. And it's despairing to see that we have so many assets, so many, in a sense, low-hanging fruits, solid institutions, very good for some countries, better than others in infrastructure, education systems that need a little bit of push and brushing out, but still something that are still, those things are established and could deliver relatively easily if only we were able to have this sparkle. The sparkle may come from an external crisis. In this very country, the moment we speak, maybe the best thing we should wish is a market crisis of the French debt. I'm sorry to say that, and I think it's a bit of an excessive statement in a provocative way, but maybe something like this will be a wake-up call. We've not been able to generate ourselves the wake-up call, neither at the member state level, even less so at the joint level. And now the fact it was mentioned earlier that everybody plays its own ballpark within the European Union is not a good sign. So maybe we need that external shock to wake up.
Thank you, Thomas. Very final word shortly from you, sir.
Thanks very much. When things are going well or so, people tend to have a sense of complacency, and they resort to short-termism is not a problem. And I think that is why so far implementation has been very weak, because also in politics short-termism was prevalent. Maybe if indeed we can instill a certain sense of urgency, more long-term thinking, more forward planning would come about. I was participating, I think 4 years ago, in a work for the French government on the future of French fiscal policy. It was a very good report. Yeah, Natacha was also there. It was a very, very good report. We interviewed hundreds of people, but nothing ever came out of it. So maybe if now there is a sense of urgency, something will come out of all the available thinking. And a second issue in Europe is, of course, how does one promote cross-border solidarity? How do you avoid the trap of everybody asking for a juste retour? And that is, I think, at the back of the failure for common financing, that certain more Calvinistically oriented people and policies only want to put in if they get out what they put in, because everybody for himself. And if we can say everybody for ourselves within Europe and not only within Germany or Ireland or France or Luxembourg, then we will have achieved our object. So finally, the question is, we are in a huge crisis. This can be a catalyst for positive change if things go in the right direction. But for that, we need an intelligent political debate and a political class that wants to move forward and not to just close themselves in under a big or little tent and say, stop the world, I want to get off.
Thank you very much. I think we had a very rich debate. We did not address all the issues like decarbonization or even financing and so forth, but I think given the the topic. It was not expected that within 90 minutes we could address all the questions, but I think it has been very illuminating, sobering to a certain extent, but also I think with quite a number of thoughts to carry forward. And I think from that perspective, it's also a debate to be continued. Thank you very much for a wonderful panel, and see you soon.